Welcome back again. It's another episode of Hump Day Real Estate with Kendell. Hey, this is Marcellus Kendell. Who do I have the blessing to have on with us today? Melanie?
Melanie Jackson. I am the, what do you call it? The socialite as well as a real estate professional in many areas. And that's who I am.
I'm Gio Savo. I'm based out of Miami, Florida. Financial advising from insurance to investments to debt management. So a little bit different spin on helping Melanie out build a business with ourselves together.
Gotcha. Well, here on my show, we normally talk all things real estate, but I had to get you guys on because I'm excited about what you guys actually have and play, especially that goes along with the real estate. So, you guys tell me a little bit about what you guys are doing.
Well, like I said to you, Marcellus, I come from the real estate background, and when I connected with Geo, because my passion is helping people, when I connected with Geo, it was just another layer of service as far as real estate is concerned. And what I'm speaking of is mortgage protection. It's all well and good for me to counsel people or to do a loan for someone in regards to getting them in the house. But when we're talking about actually being able to save someone from losing that property, it basically makes a different story and a passion that I have obviously have had for a long time. So when connecting with Geo in regards to the different insurances and things like that, it just tied it we I basically tied everything together. So Geo is going to explain to you the vehicle that will be able to help the masses, so to speak, far as actually purchasing the home. Once you purchase the home, if in fact something was to happen like death, being able to protect yourself. So, Gio, can you please elaborate on the product that you and I are working on?
Yeah. So when we met up, she was talking about mortgage insurance. And when she described kind of her passion for it, I'm like, well, there's a whole world inside of it that we can bring to the table when it comes to guiding and educating people. Because I really built a business on education, because I think in finance and in general, just it's just lacking everywhere. And so I actually appreciate what you're doing because this is a big deal. So if you think about insurance in general, what is insurance for? It's to protect an asset. It's to protect something that we want, something we're building. And most people believe that the biggest asset they own is their home. It's actually not. It's the income that's going to pay for the home. Because if you take someone's income for the next 10, 15, 20, 30 years, that's going to pay it off. That is the biggest asset. So people buy a home, they go about their daily lives, and God forbid something happens. And unfortunately, the last couple of years, we've seen situations happen even that we couldn't control. People will lose that house because the income that that person, the spouse, the significant other stops, and all of a sudden now we have to lose the home because we don't have enough money to pay for it. So mortgage insurance on its own is insurance that's basically works like this. It's based on life insurance, but it's very simple. It's normally a 15 to 30-year product. Let's say you have a 30-year mortgage, you get a 30-year loan, or 30, excuse me, you have a 30-year loan, you get 30 years of insurance, and that insurance over time will start to drop. So it kind of matches the way we're paying our mortgage. Now, there's a couple negatives to it. Number one, the beneficiary is going to be the bank. So generally speaking, it's just the value of the home. Number two, it's usually a little bit more costly than traditional insurance. And there's a couple of reasons why. So one of the things that we teach people is, yes, if you're thinking about mortgage insurance, but there's a better way to do it using a term product. Why? There's some more flexibility. Term can be static, term can increase, or term can decrease. So we can kind of customize it. But the key is this. Let's say someone has a $300,000 home and they pass away and we pay for the home. You still got taxes and insurance due year after year after year. That's still a big chunk of money. And if you think of what's happened in the real estate market recently, prices have risen, people are buying homes, taxes and insurance are through the roof now. So having a term product that can cover years of expenses is a different opportunity. So it's really about it's about educating people. What are they looking for? What's that, that asset? Now, I think the biggest argument that people have against it is, well, gee, look, if something happens to me, God forbid, my wife can sell the house. Kind of. What if the real estate market drops like it does once in a while? Now you own a $300,000 home and it's worth 250. What are you going to sell? You're completely upside down now. So the idea is, if you're buying a home, which is going to be the dream of the family, it is the American dream. We have to protect that. So no matter what happens, that's the legacy. So having insurance to protect the legacy really is the way to look at it. And what I think most people don't believe is how much it should cost. They kind of equate, well, if I have a $40,000 car and car insurance costs $150 a month, my house is 10 times that, it's going to be astronomical. But generally speaking, life insurance is going to be around 80 to about 200, 250 a month max to cover that kind of plan. I mean, it depends obviously on the health of the person, the amount of the policy, but generally speaking, a good rule of thumb should be probably right around what you're paying for car insurance. So if we want to protect that Honda Accord in the driveway, we need to protect what we're driving into the driveway for, I think, as a key. So that's kind of the big picture stuff. There's a lot of little nuances to it, but I wanted to kind of get the broad scopes of why it would be important. Because again, it's great if we buy the insurance and we're going to buy homeowners insurance to protect the roof. But we got to protect who's paying for the roof. We have to protect who's paying for the driveway. And I think it's a sobering thought, but it's something that needs to happen.
Mhm.
So I don't think too many people have heard about mortgage protection. Do you have a reason that you might explain why it's not spoken of so much?
For me, death in general is taboo. It's kind of like, you don't want to talk about it because, like, I don't want to will it on myself. But we have to be realistic. There's only two guarantees in our life. If we're born, chances are we're going to pass away one day. We kind of know that. And I think sometimes people don't want to talk about it. It's something I'll get to eventually. It's like kind of like that thing in the closet. Eventually I'll get to that, cleaning up some of that stuff. But I think if it's brought up front, once we handle it, we're good to go. And I think when you ask people what are their dreams and goals, not the negative, but what are the dreams and goals, and what if we can guarantee that those goals always happen? That's a different conversation.
Definitely.
And I will tell you this, and Melanie could attest to this too. A lot of the industry is it's very sales based. So when people raise their hand and ask a question, they get hit in the head with a sales pitch instead of a genuine conversation about how things work. So even when they're trying to learn something and trying to get good advice, it's hard, which is kind of why, Marcellus, what you're doing is good, because it can demystify things and actually see that there's real people, on the side of consumers trying to help them, because generally speaking, the industry is not doing their job very well. And, schools are not teaching this. Obviously churches, nobody is right now. So it's kind of like, it's like no man's land. We're in the information age and no way to filter the information anymore. So let's probably say that's a big one. Melanie, what do you think about that?
Definitely, definitely, because as a whole, just in the many positions that I've held, you know, whenever I even breach the subject, people's like, "Oh, what is that?" And so, it just is very eye-opening, to have conversations with people that don't know anything about it. And I wish I could say, "Hey, why don't you Google it or whatever?" But there's so many different twists and turns with that. Knowledge is power. And basically, with that being said, you got to know where to go get it. Like you were saying, we're educators. I've always been an educator, trying to educate people based upon the process as a whole. So yeah, you're definitely correct with that.
So if nobody knows anything about this thing, so how would people actually find? So I know you can Google and check, but from your experience, do you think Google has enough information out there to give people about mortgage protection?
I will be honest with you. When you Google stuff related to anything with finance, you will see two opposing arguments. They're well presented, they're well produced, and now all of a sudden you kind of flip a coin. And then it becomes, well, what does my best friend say? What does my neighbor say? But that's not a great indication of anything. Unless someone is really winning the game of finance or money or general, their chances are they're just kind of figuring it out on their own. So I always use a lot of analogies. But when we go to the kitchen, we take a recipe. We can follow the instructions. When we want to build a home, we have a blueprint. When we get to a world of money and finance, we're like, we'll just figure it out along the way. And that's a recipe for disaster. So there's so much information. And when I look at stuff, it's like, wow, this is really done well, but it's completely wrong. So I actually have wrote a list of some do's and don'ts, and we could probably get to that at the end to kind of give them a checklist. But it's just not something, again, remember, unfortunately, what I'm going to say is the industry, but insurance is a lucrative product for the agents. So it's incentivized to sell things sometimes not necessarily that are in the best interest of the clients. I hate to say that, but that is the case sometimes. And so arming yourself with quality information is key.
Well, let me ask you this. And I'm probably throwing a bone out there to help some folks and maybe stir up some craziness. But if I'm an agent and I have buyers, and we give buyers gifts for when they purchase their homes, right? And sometimes the gift is home warranty. Would you say that it would make more sense for maybe a gift to be the mortgage protection or a home warranty?
Well,
See, I'm stirring up stuff.
that's a good question. Well, think about it. It goes back to what I said. What are we protecting? If I don't come home tomorrow, they can't pay for the mortgage. If I come home, right, and the roof falls in, let's say my house is dilapidated, I can still work through that and find a way to make money and pay those bills. If I don't come home, all bets are off. So there is kind of a hierarchy. It is going to be protect the income that person's coming in with. Again, that's life insurance, and then go to protecting the insurance of the home. Now, the reason why I say life insurance, I guess I should explain it. When somebody has a home, if you do life insurance correctly, you're going to ask, what's the value of the home? Okay, so if something were to happen to you, we want to cover the cost of the home. Well, that's $300,000. Okay. Well, what about the next 4 or 5 years of your income, 10 years of your income, so you can get your kids to school, pay the interest to taxes, things like that. So it's going to be a larger number than the exact amount of the coverage. But when somebody, God forbid, passes away, we know exactly what to do. We're going to pay off the mortgage. That releases a lot of pressure on the income coming in, and then it gives us some breathability. The problem is, it's not only if they don't have it, they'll lose the home. Chances are they're moving out of the neighborhood and losing everything else along the way. Saddest thing is when people do a GoFundMe, they're paying for the casket, but who pays for rent the next month or the mortgage or the, same and so on. So it's a big boy conversation. I would probably say for you as a realtor, and it's a way you frame it. Well, you bought this home because this was a dream home. What if you could never lose it? That's the question, right? Outside of losing your job, but what if you can never lose it because of your own things? I think that would be a great question.
Gotcha. And so, are there any guidelines that would come up that maybe a home buyer or existing homeowner might not qualify for the mortgage protection?
Well, it's based on age and health, number one. Generally speaking, there's a couple different ways. There's some insurance where it's no medicals, usually very costly. Now, if your health is decent, then you'd want to get one with medicals. Why? Because it lowers the cost pretty dramatically. So that's a couple things, number one. So, are you healthy or not? Now, life insurance in general is based on age and health. The younger, the better, because it's cheaper. And this is where what people misunderstand. Now, it's not everything. I'm generalizing a little bit, but generally speaking, if you get a life insurance policy, it's going to be static. The price will remain the same throughout if it's a term product. So if it's $100 a month, you can pretty much guarantee that's what it's going to be. You have to read the policies, obviously, but the ones we promote is that. So you kind of know, because your budget shouldn't be fluctuating. So you should have a general idea of what it is. Now, if you get a decreasing term, so in other words, maybe you have 300,000 in over the many years, it drops to match what the mortgage does. It could have some options where it stays the same, or it could drop accordingly. Again, that's a lot of the conversations people have, and they should even know, like, and this is a good thing to even ask those questions. But are they healthy, number one, and what's their age? Me and Melanie sat with someone, they were in their late 70s. That's a different story. Because they're not going a 78-year-old person is probably not going to be able to afford $300,000 of life insurance. Remember, it's based on age and health. They're closer to the finish line than somebody in their mid-30s, and we have to be honest with that.
Gotcha.
We don't make the rules, but that is the case.
Gotcha. So there's somebody already, maybe a younger person than that 70, that has that's fighting with cancer or any pre-existing conditions that might be the plan might not be so great for them to get into because of the expenses or
Yeah,
how
they
much
have
it
to.
might cost.
Yeah, they would have to do an application and kind of see where it goes.
Gotcha.
You know, and then there's ways where, and then this is again, this goes to best practices. You would do, let's say there's spouse involved, you would probably do both. Now, remember something, it could be that one spouse makes more than the other, but if something were to happen in America right now, we're living on two income households mostly. So
Mhm.
one income stops, whether it's whoever it is, it could be a catastrophe. If people can't afford the total amounts, we'll cover at least half of it. You know, so it kind of goes to what's their monthly budget as well. I mean, think about it. When you guys do a mortgage, you know all these numbers. What is their monthly budget? What can they afford? You know, so we're trying to figure out what's that sweet spot. We're going, something were to happen, it's not going to be a catastrophe of the family. I mean, a death is a disaster, but it doesn't need a disaster to be a disaster and a catastrophe, you know.
Yep. So I know we're talking about mortgage protection, but are there some other things that you would like to throw out there that there's some folks that are they're making one of the most biggest investments in their life? What are some other things you think about that folks might be interested in?
You mentioned it early on, and this is before we started recording in probate. Having a will is a big one now, right? That's a big, what something happens to not only if something happens to a person, let's say God forbid both spouses pass away, all their assets go into probate. Now it's a lot of money in legal fees for what a document should say what to do. Power of attorney is a big one. Um, Again, a will if there's young children, because not only is the house go into probate, now the kids go to foster care until everything kind of gets fixed. So that document right there, like you had mentioned early on, that's critical. And I would say then once you get a mortgage, sitting with someone to figure out if there's a way to pay it off faster. You know, is there a way, because there's a lot of interest paid on a mortgage. So that's kind of where when me and Melanie kind of met, and she's telling me her story and I'm kind of bringing my skills. So we're like, wow, there's a lot of magic here, because not only selling a home, but then teaching people how to pay it off faster, protecting it, and just doing everything where that family can have really, you know, I think at the end of the day, the dream is generational wealth and financial security. It kind of comes with a bunch of different moving pieces, not just one or the other, but everything together.
Can,
Yes.
can you elaborate just a tiny little bit on what type of programs or anything that may be out there that you would have that would help folks get into that paying the house off situations?
So it goes in accordance with understanding how interest rates work.
Okay.
So money compounds. So this is a great conversation, and I'll use an analogy. Think about a snowball rolling down a hill. We've all seen the movie Frozen and National Geographic. As that snowball starts to roll, the bigger it is, the bigger it gets. So what a snowball is doing is compounding. It's growing on itself. Money does the same thing with interest rates. In debt, money grows this way in the wrong direction. In investments, money can grow positively. So understanding how interest rates work, first off, can teach us when we're trying to pay off debt, student loans, credit cards, mortgages, which way and which format to attack them in the right order. So there's actually there's math. We have a computer program that'll analyze someone's debt, not just the mortgage, but in general everything. Because even though a mortgage may have the lowest interest rate on debt, it is a long expenditure. So there's a lot of interest paid on it. So sitting with someone and going, okay, look, what's the total family budget? What are we paying towards that mortgage? And then sitting there going, is there any free money left over? And where can we utilize it to get out of debt quicker and faster? Sometimes it's directly to the mortgage. Sometimes it could be the student loans or the credit cards, but then you start cascading their debt quicker and faster. And that's a key, because once somebody's out, that's a real asset. Until you really pay it off, it's still the banks at some degree. But now we could pay it off. We have some real benefits. And this goes for rental properties too. You know, think about being able to pay that off faster. Now you have, you know, an asset that's accruing and no debt.
Oh, well, another, you just sparked another question for me. So mortgage protection, can someone purchase that on a rental property?
Yeah.
Okay.
Yeah, absolutely. So same thing. And it goes, that's a good question, because when you're doing, let's say a traditional life insurance plan, you're looking at all the debt, you're looking at the assets, you're looking at the liabilities, and kind of coming up with a full picture. Now, when it comes to rental insurance, I mean, a rental property, you do have some income coming in. So that does change the math a little bit. Because if I know I got $2,000 coming in from that rental property, it's very different than if it's my home and I don't come home, because now my whole income's not coming in. So it does change the math to some degree, and maybe in their favor.
Would that be more expensive? I know everything geared towards rental properties, it seems to be a little bit more expensive than.
Not necessarily, no.
Okay.
Yeah, because you're going to bundle it. That's a key. So I'll tell you one of the benefits. Again, these are some generalities, but policies that can be written on husband and wife together generally are cheaper. When I say husband and wife, it could be spouse, any spouse, are cheaper than separate, because there's internal fees that if they do two policies, there's fees for both. If you join them together, there's less fees. So there's that as well. And then you're looking at the total picture. So it's not going to bring the fees up much, if at all.
Gotcha. Anything else you want to tell us about what you guys are working on? Or?
Well, really, Gio, did you go into the analysis that we can do? Because that's a big thing that people could definitely benefit from. And in that way, they would have a clearer picture, I guess, so if you will, of what they're actually looking towards in the future.
Sure. So here's the best analogy I can use. Think about whenever we go on a road trip. Very few of us are just going to go and just get in a car and start driving, especially if it's a couple hours away. Well, if you think about a mortgage, you think about our life, that's a 10, 15, 20-year journey, 30-year journey sometime. So what we create for clients is what's called a financial GPS. It's a 15 to 30-page document. Now, this is really important, right? It has in the middle section the debt analysis that we kind of mentioned, the need for insurance, because once we know all the data, we can kind of figure out whether it's needed or not. If we sit with a family and they got millions of dollars in the bank, insurance is not as critical as someone that's starting out, kind of putting the pieces together. It's dynamic. So if you think about what a GPS does, it knows where we're at and it knows where we're going. I think the biggest mistake people make in finance in general is they don't have a finish line. They don't understand where they're going. They don't have a destination. So if you think about it, if you put into your GPS no destination, you're just going to drive around in circles. But if you kind of know where you're going, right? What does it do? We can reverse engineer and go, okay, here's where you're at right now. Here's the mortgage. Here's your debt. Here's your income, and kind of create this all-encompassing comprehensive game plan. Inside of that, out of the 30 pages, like I said, 15 to 30 pages, why is there a difference? Because there's some other factors depending on how many homes, depending on other factors, but there's about 4 to 5 pages just on debt, 3 or 4 more on the insurance portion of it. So it's a heavy document. Now, what's so cool about it is we don't charge a penny for it. Why would we do that? Because, and this is what's very unique about business today. Everybody wants to take first. Our whole business model is we're going to give everything away up front. And the reason why that's so important is because there's real value in it. It goes where it's supposed to go. So our business is all built on referrals. We do zero cold calling. We don't buy lists. We speak generally with people. And then when we do good work, we can get referrals. That's a solid business. It's scary if you don't bring real value, but when you know you could bring some value, it's pretty magical. So every one of our clients gets that. There is no strings attached. The one question I ask is there anybody else that needs one? And it kind of just goes where it's supposed to go. So it's very unique because at that moment, maybe they don't have a home. Maybe they're thinking about it. That's another question, Marcellus, too, that, if I'm sitting with someone in their mid-30s and like, yeah, I want to buy a home in 3 or 4 years, maybe getting insurance that can cover the value of it is key then, because we don't know what's going to happen later on in life, and it's going to be a lot less. It could be 10, 15, 20, 30, $40 a month less sometimes. So it's a business decision, but having all that together makes a lot of sense.
Gotcha. Got anything else for us? Else you guys
I kind of wrote a list of some do's and don'ts. So if people have a checklist, this is what I would recommend. Number one, not every life insurance company is made the same. You can go to what's called AM Best. It's a rating service. It's independent, and life insurance companies will have a C, B, A plus. You want to have an insurance company that's in the upper tier, and here's why. Because if God forbid something happens, that's the safety net. There can't be a hole in the middle where somebody falls through. It has to be complete. So the rating is important. There is different types of insurance, and people screw this up a lot. Accidental death is not pure life insurance. You can only get paid as a result of an accident. And what does that mean? I get into a car accident, but the cause of death is an infection in my lungs. My family's not getting paid. So you have to know what you're getting. I still with a lot of people and they'll say, Gio, I pay $20 a month for $1 million of coverage. I go, that's not what you think it is. That's another big one. The other one, which is huge, is what is the time frame that life insurance company will pay a policy? In other words, the industry average is about 4 months. Somebody passed away, mountains of paperwork, 4 months later. The company we work with is about 14 days. That's a big difference. And the other thing is, I would say, and this is a controversial one, but it's got to be said, whole life insurance does not work for what we're talking about. It's way too expensive. It's got too many fees inside of it. It needs to be pure protection for what we're working on. I know it's controversial, but mathematically, and at the end of the day, math doesn't lie. We got to go with what's true, and we need to cover massive amounts of an asset, especially right now with the average home being way over. I think it's what 300. I think it's hitting 300 now on average. Yeah.
Gotcha. So we appreciate you guys for taking the time out to come on the show. How can folks reach you guys?
Melanie, you want to go first?
Well, I can actually give you my my phone number, or should I say my contact information, so that you can have whoever's interested from this contact me.
Okay. Well, again, I appreciate you guys taking the time out. Folks out there, these are things that folks really need to know. Your existing home buyers, your new home buyers, you need to know how to protect you and your family. You need to get with some folks who understand how to help you protect you and your family. Hey, this is another Hump Day Real Estate with Kendell, and we're signing off. We appreciate you. Like and subscribe. Please share this with as many as people as possible, because I think this is valuable information that folks need to have. I thank you guys again for coming on, and I'll talk to you guys soon.
Thank you.
Bye.
Bye-bye.